Hello, everyone. This is Leslie Jouflas with Trading Live Online, and welcome to this segment of your Daily 5. This will be for Monday, November 20th. You may have been following my recent videos where I've been updating the indexes, the S&P 500. My last year Daily 5, I believe, was on November 8th, and I covered the ETF for the Russell 2000. That symbol is IWM, and that was also a follow-up to your Daily 5 segment from August, where I was giving a heads up on the bullish bias for small cap stocks in the November window, which we've been in, and small caps along with technology have been doing really well. So today what I would like to update is, are we buying pullbacks? Should we be buying these pullbacks that the market is likely to have? We haven't had a lot of pullbacks recently, but should we buy a good pullback? Well, let's take a look at the charts and see if we can answer that question. Okay, so let's start with the S&P 500 on a monthly chart, and this is a futures chart, but you can find this on a SPY chart or the SPX chart as well. A couple of things I want to point out is, first of all, this pink line right here, this is just representing the length of this downswing, and the markets tend to repeat, not always exactly, but sometimes fairly closely, previous moves either up or down. And so this leg to the downside was almost the same length as this one that we saw in 2020. And if we break it up a little bit more, which I'm going to do for you right now, is if we take this little smaller swing here, I'm just going to clone this line. And so then it had a retracement to the upside, and then another swing to the downside, and it's just about the same length as that one. So this particular, it's also about the same length as this one. And so there's a repetition of some of the swings that are occurring. Now this last swing to the downside right here, you can see did not quite get there. But sometimes when you're studying swings that we call harmonic swings, just because of the repetition that they have, sometimes you'll see that the contraction or expansion of those swings is a Fibonacci ratio of it. This one just about 0.618. And when the swings start extending, getting bigger, they'll generally extend by about 127 to 1618. In very, very strong markets, they will extend to multiples of that. But sometimes it's just an interesting kind of phenomena to be taking a look at, and it can be helpful in the analysis. So this swing to the downside, again, if you've been with me on my videos on your Daily 5 and also on my own YouTube channel, I covered this support level many, many times. And the 4150 to the 4200-ish, I always say ish because we're just making a zone. We're not making an absolute number. That's where the market found support. It came just a little bit below that. In the futures, 4122, I believe, was the low of that move. But notice that the opens and the closes and the opens were all above where the main support was. And the markets had, as you can see on this monthly chart, a strong move so far off of that support. Now, the month, of course, is not closed yet, so we don't know how this bar is going to look. And we're going to scale down a couple of time frames. So one thing that I'm going to be watching are these highs right here, back from July of 2023. Then we have the decline, found the support, strong move up. So this support level now is really worth keeping an eye on if the market were to turn around at some point and go through that support. That, in my opinion, would be a bearish move. But the market, I'm going to take this off the chart for right now. On the retracement so far, I want to look at this retracement, and then as we scale down, I'll show you this on a couple of other time frames. So on the monthly chart, sometimes you can use your Fibonacci ladder. I use the 382, 0.50, 618, 786, 886, and then the extension ratios I use are the 1.27 and 1.618. I use these because these are the most common ones that the market tends to trade to. But sometimes when you're evaluating a move either up or down and you're doing retracement levels, you can kind of gauge the quality of the retracement. And by that, I mean, if we see the market coming off these lows, notice how it went right through the 382, right through the 0.50, right through the 0.618, and now it's found a close right around this 0.786 retracement. Again, that's from the July highs of this year down to the low of this swing. So this is telling us just the way that it's coming through the 382 and 50. If you see that, that's an early indication that you'll have a stronger move to the upside, most likely, because nothing's ever guaranteed, as you know. Okay, so with that, let's take a look at another time frame. So now I'm coming down to a weekly chart of the S&P 500, the mini, the futures chart. And I covered this on, again, on the last video of your daily 5, this inverse head and shoulder pattern. And I think this is the main pattern to be watching on a longer term basis right now, because the market, when it came down and tested to that 41.22 level, into that support level, it was really also testing this breakout level of the inverse head and shoulder pattern, giving it a confirmation. That's another reason why these lows are very important, that if the market were to turn around at some point and take that out, that would again be very bearish. So it's had a successful test of that support and of this particular pattern. The blue line here is just doing a measured move of the pattern and projecting it to the upside. I think that there's a couple of ways to do the neckline on this. We have the left shoulder move to the upside, and we could do a downward sloping. In that case, instead of a horizontal, we would get just a little bit different target to the upside. But that target's coming in just a smidgen above 4,900. So let's just call it close to the 4,900 level. But look at how much time it's taken for the market, first of all, to form this pattern. This started forming back in the summer of 2022, and then the breakout occurred earlier this year in about April. You can see the clustering around there, but it didn't really get going until about June and July of 2023. So this was also one of the other trend lines that I was watching, that I was looking for the market. In order for the market to really be able to propel higher, it's got to continue making the pattern of higher highs and higher lows to keep an uptrend. So this test to the downside also is keeping a higher low starting from October 2022 lows. We can see the low, higher high, higher low, higher high, higher low, just a little bit neutral in here, higher high, and down to this test, we have a higher low. So there's another reason. That's the third reason why this support level is going to be important. So this was the shorter term trend line that I want to see the market be able to break above, and it has done that. And so this is the pattern I believe to be watching. Now, keep in mind the amount of time that has taken this entire thing to form, break out, retest, and now it looks to be on its way up again. So let's take a look now at another chart. So now we've scaled down to the daily chart. So we looked at the monthly, got a kind of a bigger term view, bigger perspective. We looked at the weekly chart. Now let's look at the daily chart. So we still have the pattern on here, and we have the breakout area. We have the test of the support right here, and you can see that that's also right at that breakout area. And then this is where I had made the note that the price really needs to move above and hold above this trend line. So on the daily chart, we see that there's the breakout, and now we've had a few days of this little consolidation going sideways. I'm going to kind of make this a little bit bigger. So possibly what we might be looking at is a little consolidation pattern in a new trend above this trend line. Now this pattern can change. So sometimes in trending patterns, they may be flags, they may be triangles, they can kind of have a downward slope and upward slope to them. So if this moved to the downside, then we might want to be changing the trend lines on it. But for right now, this is what I'm showing as a potential triangle, a pause, and a potentially new uptrend. So we've already identified we have higher highs and higher lows. Now we have a break of this trend line. So if we were to kind of scale this down more, well, where is it we don't want to see price go in order for this uptrend to be continuing? I would say definitely these lows here. On this time frame, it would be breaking a pattern of lower. See over here, we have the lower low, lower high, lower low, lower high, lower low, and now we're starting to make a higher high. This high is above this high, and a higher low and higher high. So any move back down, we want that pattern to continue in order to be bullish. If it breaks this, I think it'd be negative. We've got the 41.22, and I think that would be really negative. But maybe it just starts to get a big range of testing. So a few things to keep an eye on. However, the RSI is showing some nice strength here. You might remember back at the last daily five, probably the one before it as well. I was saying that the RSI still had some work to do, and now it's done that work. It's gotten above these previous resistance levels on it. If I put the horizontal cursor on, you can see that it's climbed above there. So this is in a bullish phase right now, and so we want to see it remain in a bullish phase. So it's possible this gets a test down towards this trend line, which would be right around the halfway point of this long Japanese candle. In Japanese candlestick theory, about the 50% mark can be a very good support level to be watching. In Japanese candlestick theory, actually the entire real body is considered support on this candle, but oftentimes, especially in a very bullish market, and of course opposite in a bearish market, oftentimes right around that 50% point is where that support comes in. And if we were to get a little move to the downside towards the trend line, that'd be pretty close to that as well. And we've got another trend line here intersecting at this point, and that's just around that 4460-ish, 4470-ish, and that's very close as well to that. So we may see a pullback. So to answer the question I said at the beginning of this video, are we buying pullbacks? Yes, in my opinion, I think buying pullbacks right now, unless something changes that I've just pointed out, I think buying pullbacks is the way to go. Now, right now, let's take a look at the retracement because I want to show you something compared to the Nasdaq. So here's the 786 retracement level from the low to high, and look at these bars to the upside. It's just a very strong move to the upside. A little bit of a pause here. There was a fake out move to the downside. Market reversed, came back up again, and through that trend line. So we want to see that hold. But I'm going to show you something on the Nasdaq that has to do with that 0.886, and we can be watching for that now on the S&P as well. It hasn't gotten there yet, but the Nasdaq did. So let me show you that now. Okay, so this video is going to be just a bit longer than normal for your daily 5, but I want to show you the difference on that swing here from 2020. We looked at that swing from on the S&P 500, how it was almost an equal length swing from this correction down and this one, but look at the Nasdaq. The Nasdaq had a much deeper swing. So if we take this is what I mean by you get expansion and contraction of these. If we take that and we just put it, right down around the low of that, so we're using double the length, then it expanded to 2 times the length of that. So that, I think this is a pretty good example of the expansion of using a kind of harmonic measured move, equal length swing like that. So I just wanted to point that out. But now we have such a different story than what we were seeing here. And the technology has been leading the way up. Oh, just a sec. I'm going to move that because I want to get the retracement right. So you guys can play around on your charts with swings like that. And you can do this on any time frame. It's in the courses that I have. I go through this quite a bit, go through everything quite a bit in my courses actually. And that's just one thing. That's like a beginning point in it, so you can start to understand some of these price swings. Okay, so on the S&P, we just looked at that it's at the 786. So it's not as strong as the Nasdaq, is it? We can see that because this retracement on the Nasdaq was able to go all the way up to the 0.886. Again, we're on a monthly chart. We don't know exactly how this bar is going to close, but it's back up again at the 886. Now, this 0.886 retracement, this is what I call the last chance retracement. And just a minute here, I'm just trying to do something. So the 0.886 is actually the square root of the 0.786. That's where this ratio comes from. And in my years of experience, this is a very valuable ratio to keep on your charts. I'm starting to see more and more traders use this ratio. I call it the last chance because you can see if it's not on the chart, that's not there, which many traders are not using that ratio, then once it gets through the 786, they're assuming that the market continues up at least to the 1.0 and maybe making new highs or lows if it's out the opposite direction. However, this is like a catcher's mitt sometimes. It catches that move and that test of that high, and then many times has some sort of consolidation to it, which this has had. But when you start to get closes above it, there's a high chance that the market will then get to that 1.0, and very often it will exceed it and move up towards that 1.27 extension of this swing. So that's what we want to be watching for first on the Nasdaq, because it's already traded to the 886, had some consolidation, now back up to it. So we want to watch this on the S&P as well, which is at this 786. So we want to see how it reacts around that 0.886. Maybe it stalls, kind of like the Nasdaq did. As long as it doesn't get a complete reversal down, then it might just be doing some consolidation before price is ready to attempt getting through that particular level. So we can look at the Nasdaq also on this weekly chart, and we can see from the highs back in 2021 and the decline. We can see all of this, and again, remember, here's the quality of the move up through the Fibonacci levels. It got a little bit of resistance at that level. But notice how this retracement, if it was really bearish, this retracement should be going much deeper than what it did here. And then it came back up through the 618, a little resistance at the 786, and then finally a little bit more jiggling around. So remember, we're looking at a weekly now. We were just looking at the monthly. So this gives us some detail, and this ABCD buy pattern that formed before the market has recently turned around. Look at the big long bullish engulfing, and then it comes right through this trend line and right back up to that 886. So this gives us a little bit more detail on being able to watch the price action. So again, this level, no, we don't want to see it come back down through this level right now, and especially this level down here. We want to see it get up to the 886 and start closing above it. Then the expectation is going, not guarantee, expectation is it's going to trade at least to that 1.0. If it makes it through, I'll be looking for that 1.27. But we'll be looking at all-time highs. So there is no resistance up here. So we're not going to make an assumption that the price will get any heavy resistance here. We're just going to be looking at it as sort of a target level. Now, on the daily chart of the Nasdaq, we can see that we've had, of course, a very strong move up. Look at this trend line here. Look at this small, only a one-day consolidation, and then right through that trend line. So again, we want to be looking for the pattern of higher highs and higher lows to continue. And so if we just use that basic concept, and you guys can look up Ralph Akamporis. He was here in Seattle, and he did a 3-hour presentation for us. You can find it on Stock Charts. And he has got like the best PowerPoint deck, and he can walk you through that simple concept of higher highs, higher lows, lower highs, lower lows, and how powerful it is to your analysis. So, do a little Google search on there and you'll be able to find it. If you can't find it, email me and I will send you a copy. But Google it, on YouTube first. It'll come up easily. So here it is on the 886. Now we can see a little more detail and see how it's hovering right around it. Again, my expectation is that this market's going to go through that 1.0, make some new all-time highs, head up towards that 127 first from this swing. That's not the same swing as here. So this 127 is going to test those all-time highs right here. The bigger swing, we want to check the weekly and the monthly charts, look for strength. And if it gets above that level, then we'll be looking for that bigger 127. But this will be the next one to look for if it gets above here on the daily chart. So now let's take a look at the Dow Jones Industrial using the YM, the futures contract for the Dow Jones Emini. Contract. So we can see here's our 886. Here's our last chance fib ratio. So remember what I said about this is that, this is where often traders think the market's going to continue after it makes it through the 786. But that catcher's mitt on that 886 comes into play, and the market finds that resistance, does a pullback, but we still have a higher low here. So we have a higher high, higher low, higher high, higher low. So if we were to see the Dow Jones Industrial exceed this high, that will also be, we'll have a, here's the low, we have the higher high, higher low, and that would be a higher high if it exceeds it. So let's take a look at a little bit smaller time frame. Now, out of the three indexes, the Dow has not been as strong, certainly as the Nasdaq, and not as strong as the quite as strong as the S&P. So here's what I'm watching for on this. So here's where we see it came above this little trend line right here. This one's going to be the next challenge for it. And on the RSI, I've got some resistance marked in here. I want to see this RSI be able to exceed these last peaks with a break of that trend line. So here's the 886 pattern, or excuse me, fib retracement. This is the pattern. There was an ABCD sell right into that 886, and then ABC extended CD leg here, and now we've turned around to the upside. So this is going to be the level to be watching on the Dow Jones Industrial. If you have the YM contract, you can use that, and also the resistance level on the RSI. Now for the Dow Jones, it's the same thing on the daily, looking at the daily chart here, where we're looking at the support areas. Where do we not want to see it go? We don't want to see it go below here. And even here, we would have to kind of take a look at the weekly charts and the monthly charts and see, how the pattern of higher highs and higher lows. Sometimes on a shorter time frame, it might look like it breaks the pattern, but then on the higher time frame, it's still intact. So, but we do want to watch this as a support level as well. You can see this trend line. If it dips a little bit below to the pink dash line here, that's coming right through to about that 50% level of that last long candle. So that's what I'm going to be watching for. And remember, there is an upward bias generally on Thanksgiving and the day after Thanksgiving as well, which is pretty light trading. Well, thanks for sticking with me on this whole video. Please feel free to ask any questions or make some comments if you like. And again, Google Stock Charts YouTube channel for Ralph Akampora's. They have it in 2 sessions on there. So I will see you on the next Your Daily 5.